Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for Monday evening, 12/8/2025. Markets drifted lower, clearly waiting on the Fed. We're at resistance. We've got Japan probably raising this week. Is it possible this rate cut might be a trap and we're going lower? Just a hypothesis. I don't trade on hypothesis, but it's enough of a concern that I might be careful as we think about the next 48 hours or less of the U.S. markets. Again, my name is Jeffrey Scott, marketmripro@gmail.com, Google Groups called Top Down Trader, and my website's marketmripro.com. This is for educational purposes only. This and every video I do is to show you how I use my tools for top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I've got tools in multiple platforms, um, all of which have their pros and perhaps cons. And we'll look at that soon. Join my Google group. It's called Top Down Trader. Sign into Google Groups. Go to all groups, search for Top Down Trader, and let me know how you want to be contacted. Leaders are still above the 50-day moving average. And until I have to change that title, you still have to be thinking the market's going to go as all right and maybe going higher. We're going to look at much more than this, but when this index breaks down, the market's done. And we have not broken down as of yet. Know your news and earnings. So Tuesday morning, we get the NFIB optimism and then the delayed October job openings. It's December. How much could October openings mean anything? Wednesday, we get the employment cost index for Q3, but more importantly, we get an FOMC rate decision and a US Fed budget. We know that they stopped their quantitative tightening a week or so ago, and the markets are certainly expecting us to see an additional 25 basis point cut. Earnings wise, Toll Brothers is down today on earnings. You could see Tuesday we've got a fair number, but if you own one, it's a big deal. But some of the big cap techs that we watch are done. But then look at Wednesday. We got Oracle, Adobe, Synopsys. That'll obviously get enough of people interested. Broadcom on Thursday, Costco on Thursday. So there's still plenty to go. It's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. So just found out that my granddaughter, who's with us this week, has a birthday party on Saturday, which means I'm a free man. So let's go ahead and do one of our 2 to 3 hour educational events. So we're going to do it at 11 o'clock Saturday morning, December 13th. It's open to owners of my stuff at any platforms, those that are even thinking about it, and frankly, anybody that just wants to hear what I do. A Zoom link will be sent to Top Down Trader members and in the remarks section on YouTube. Review of new features, Metastock add-on. We're going to do a market review, options decision making, and answer your questions. And typically these are well received. For more information about anything I talk about, the software, any of the platforms, just reach out to me at marketmripro@gmail.com. For customers of Market MRI Pro, the trading app who have issues, reach out to Praveen at coding@marketmripro.com. Consider joining the group. As usual, I'll spend most of my time tonight in the Market MRI Pro trading app, much of which can be duplicated within TradeStation, within Metastock, and even some of this in TradingView and Wealth Charts with my tools. All right, so let's start with the daily briefing and see that Bitcoin, interestingly, was up today. Volatility was up. The dollar was up, and then the U.S. markets were mostly lower. The Russell was up a tad, up 0.04%. Nothing got clobbered. The worst was the diamonds down 0.39, but it felt worse than it was. Now, is there a story here? When we look at the closing range, everything finished at about the middle, so there's no story there. If we look at 52-week new highs minus new lows on the NYSE and the NASDAQ, still positive, but nothing exciting. If we look at the S&P 500 sectors, the only thing up was technology. Leading to the downside was discretionary, materials, utilities, and healthcare. On the theme perspective, it was data centers and biotech, batteries, semiconductors, blockchain, aerospace. Norway was supposed to be heavy commodities, leisure and entertainment, but the number starts to come down pretty quick. From the loser perspective, the weakness was in really not, I mean, marijuana, which we don't care about, gold mines, home construction, oil exploration, silver miners, clean tech, copper. So a lot of the things that have been leading underperformed in the markets today. This is the big one. Only 32% of the stocks in the S&P 1500 were up, 46 in the Nasdaq, and 33 in the NYSE. Now, is this enough to trip the timing model? No. In fact, everything is still in a uptrend by Bongo. Everything's above the WMA, and both of those things have to occur on the same bar for us to trigger a sell signal. So the dailies still are okay. Now, consolidation here, is it necessarily a bad thing? Not if it goes sideways and stays above the WMA. Um, but we're looking for year higher closes at the end of the year and not going to get there going sideways forever. But sideways consolidations can be okay. On the weeklies, you could see that we're holding above the recent breakout area. And if you look at all-time highs, we are just off all-time highs on the spiders. I think we had all-time closing highs yesterday or last Friday, would have been it a week ago, not even a week ago, the last trading day. Off all-time highs and closing highs just a bit on the NASDAQ. The Russell, we hit all-time closing highs on Friday. We're up today, so that means new all-time closing highs, and the diamonds were just off of all-time closing highs as well. It's hard to be bearish when you're off of all-time closing highs. And no surprise, if the weeklies are all in a buy, you can predict that the monthly is still pretty strong as well. If we look at US indices, let's see what kind of pressure we're seeing right now. So let's just blow them up one at a time. So did we break down? Well, you've got a low close doji if you're a fan of John Person, which can be significant. It looks like the Pazo seasonality season's about over. We may have a few more trading sessions. It's interesting. Um, if you look at, we got the 21 EMA, the 17-day, the 50-day, all underneath, the 100-day underneath. Lots of support. Hasn't broken down. 1 week day on modest volume really doesn't change any of my basic philosophy. If we look at the Qs, same story, not quite a low close doji, still have good seasonality, but it looks like it's starting to moderate. Lots of support underneath the price, not too depressing. If we look at the diamonds, and again, all of these are just off all-time highs. Again, a reversal candle. Is this it? It could be. I mean, is this some complex head and shoulders top? It might be. But right now, I'm going to take a day at a time. And yes, it's down, it's concerning, but we're not that far off of all-time highs. If I look at the Russell, the one that was up a bit today, um, you know, it doesn't look under pressure at all, does it? So my take on the markets is, yeah, we're probably going to pause up here. Maybe not do much on Tuesday until we go into the Fed. And if the Fed doesn't cut, I think we're going to see a problem. Now, we're expecting BOJ to raise rates later after the Fed on Wednesday. How's that going to impact us? The rest of the world seems to be raising rates. If the Japanese raise rates, that's the end of the carry trade. How does that impact on us? So there are a lot of missing pieces here and a lot of missing data, moving pieces and missing data, so it should be interesting. The volatility was up. It's still at a low level, but it did gap up and close higher today, up 8%, something that I'll be watching closely. I don't want to see that moving up. And then the dollar, which had come back down to a resting position, has bounced off the 50. And, when I do this, I'm not that excited by the dollar. If we look at commodities, I mean, you can see gold is sort of struggling at this area here that it needs to break out above. And I might move that even higher. Move that down. Until gold breaks above this line, I probably would not be adding to my position, but I expect that'll happen soon. Silver is consolidating at all-time high levels. You can see that here. Um, it's been beautiful if you're in it. Oil has run into this area of congestion. It's in a bit of a wedge on the bottom of the wedge. We'll see if this holds. Natural gas had a sell-off today, hurt my EXE. Hate when that happens. You could see predicted by you had um, a, a a shooting star on Friday, which led to a drop lower, which is a low close doji. Have to keep an eye on natural gas. And then probably the most concerning is the 10-year and the 30-year creeping higher, up zero point 0.8 on the 10-year, up 0.52 on the 30-year. And you can certainly ask the question, why are rates going up if the Fed is cutting? It's simple. If the bond market, which is the smart money, does not like the rate cuts, you could see the 10 and 30-year go higher. Now, the bad news is that's going to have problems for construction business. But stock markets actually like a rising yield curve. So if the long part of the market yield curve goes higher, short term goes lower with the cuts, it might be okay for the US stock markets. If we look at the buckets, do we see anything showing significant overbought or oversold? We do not. If we look at market breadth, I talked about this being a potential megaphone. I think that's still in play here. And again, a pullback to this level would be painful. But if we look at that NYSE, it is this is the fourth time that it's failed at this level. It did set an all-time high on Friday and then reversed. So if double tops are bad and triple tops are bad, what does that say about quadruple tops? And that is not a bullish candle pattern right there. NASDAQ doesn't look nearly as nefarious. The NYSE and the NASDAQ composite. You can see stocks above the new high, new lows came down on the NYSE and as well on the NASDAQ. New high, new lows are still positive at 52 weeks on both of these, but the AD lines are lower and the up-down volume is only positive on the NASDAQ, and there's no new signal. If we look at market breadth number 2, where it's got my 13-week new high, new low, you can see we dropped to 58, 63, 77, and 66. So we are not in an overbought scenario where I would necessarily be worried about that timing indicator. Um, if we look at the key sector timing, now notice I thought we fixed utilities, so I just sent a note to Praveen that XLU's got to be fixed. But what really bothered me today was XLB. XLV rather dropped through. Now it's interesting. What I've been playing is LABU, which is a component of XLV, biotech, and biotech remains very strong. But the rest of the healthcare complex seems to have weakened. Any other changes today in timing? Technology is down 2 days in a row, but after Trump eased restrictions on NVIDIA to sell to China, of course, with a 25% payment to the Trump Foundation, known as US Treasury, um, we could see tech jump tomorrow, and we'll have to watch. We go to the JAS layout, you'll see that we're dealing with 3,700 stocks. So therefore, my top-down analysis is not the S&P 500. It's not the S&P 1500. And we're working with a lot more than 1,500 stocks. Each one is in a sector and industry group. If we look at what performed well, if anything performed well, it's technology, communications, followed by financial services. If we then look at what the top, well, actually, I'm going to do it different tonight. Those were the top three, but let's just look at in the whole market, what were the top 10 performers from industry groups? So we got semis, biotech, aerospace, hardware, communications, one, two, three, four, five, specialty retail, food distribution, hardware, internet content, entertainment. These are the 823 stocks in those 10 industries. Let's reduce it by going $5 and 500,000 share filter on, which takes me down to 407. Let's look for pullbacks and uptrend. Brings me down a little bit more to 95. Let's rank these by positive impulses, and let's just see if any of these things look interesting. Wave Life Sciences. This was one of the big movers today. It was on news. This is the joy and the sad thing about biotech. It's joyous when news comes out that you weren't expecting. That's positive. And they had some great data get presented on their weight loss trial of WVE-007. And if I remember correctly, weight loss without muscle loss, which is one of the problems of the GLP-1s. Now, what's the market cap today? The market cap is 1.7 billion. Well, these stocks have a tendency of running. Look at Madrigal, for example. It's going to be a crowded field. It's hard to know who's a winner. This may pull back a little bit, but that's what drove this one. TWG, Top Wealth Group Holding, don't know what it does. 5 to 22. It looks bizarre. Guardian Wireless RC system for the crane industry. I don't know if there's a split involved there, but that's a bit of a move. TERN, Terrence Pharmaceuticals. You could always click there. Relapse refractory CML. All right, so I know their drug. A lot of people think highly of it. Novartis has the current drug. They think this is better. That Novartis drug does $1.5 billion a year. OCUL, was this another data piece? Faster FDA path for vision drug. So again, how can you predict these things? Now that one looks interesting to me. A big gap, but it's not ridiculously far, although it's certainly getting the high jump. Here is Nurix Therapeutics. Don't know what they did today. So again, Waldenstrom's macroglobulinemia, type of blood cancer. So you can read the news, but I knew this week was ASH. I knew, which is American Society of Hematology, which I just left. And I knew a lot of these stocks would be up, and therefore that's why I'm holding LABU, which benefits from these, whether it owns it or not. Why would it benefit if it doesn't own it? Because this kind of news causes everything to rise in the group. MTVA, no interest. Chimera had some positive data in a drug that could replace Dupixent, which is a very um, high-selling drug from a couple of manufacturers for asthma and eczema and a few other things. HLIT, Harmonics, a little bit of a breakout there. GPCR structure is another one that had a big move. And this one had, I think, 36% weight loss as an alternative to a GLP-1. Let's not forget Fulcrum, another biotech that had a good story today with a big gap up. Don't like where it closed. It is hard to figure out how to play these guys. The best is if you bought them a long time ago and you sat on them because you were a true believer and knew their story. It's hard for me to chase these, which is why sometimes, even though I'm in the business, I like holding on to LABU. Flextronics, one of the contract manufacturers. This must be an earnings move. Let's see. Nope. Earnings were not to February. 78 cents versus 70 versus 77 cents. That's not a big earnings move. Was there any news today? Lex versus ROK. Well, Zach's gave an opinion which is better. All right. WBD, Warner Brothers Discovery. This is a stock that's a takeover candidate. Netflix has a bid in place, and Paramount came with a better one. VIPS is a Chinese um, online retailer. Now, this one looks interesting. This one squeezed out and broke out here, but it's running up higher. It doesn't seem to be overly extended. Its high jump is, nope, it's at 50%. Let's look at here. Earnings are not to February 20th, 85 cents versus prior 70s. That's a 20% grower. Trades at a multiple of 5, pays a dividend of 3%. This one might be an interesting one to be playing with. All right. Twillo, big gap up on earnings, pull back. Looks like it's ready to run again. SA, I talked about this one over the weekend. They have a huge position in SpaceX, and when SpaceX got an $800 billion valuation, people realized that their position in SpaceX is worth more than the market cap of the company, which means you get the company for free. PTGX, another biotech story. What a now this is a beautiful looking chart pattern. Do I buy it up here? I don't know anything about this company. It's got a big negative PT. I could run here and see what it is. Peptide-based therapeutic drugs to hematology and blood disorders. Again, this is the week of the blood doctor convention, similar to the cancer doctor convention in May. And I'm heading now to San Antonio for the breast cancer doctor conference. So there'll continue to be some news flow in biotech. So we've gone down the list. DQ is a drilling company. Um, Actually, it used to be. Now it's a solar company. Consolidating here after a pullback. I mean, I've been playing First Solar, which is a little volatile, but boy, it's doing well, isn't it? Um, DQ is one of the others in the group, and CommScope looked really good and it broke out. Is it getting ready to run again? Um, Couple of interesting looking charts. I think I'm more concerned with what the market's doing and maybe a little bit nervous going into the Fed meeting, but probably because I'm have bought quite a few stocks over the last couple of days. Let's go back to the impulse view. Let's clear my filters. Oh, there's not all showing up. Sometimes I gotta run the little reset because I should have 3,700 stocks or so. Now I may have to go and clear the filters over here. Let's see. Nope, they're closed. Come on. All right, we got 3,710 stocks. Look at the A plus. I think you're going to see some familiar names. So DBVT is, take a look at what they do. Biopharmaceutical company in immunotherapy, skin-based immunotherapy, peanut allergies. Preclinical, doesn't really have much revenue yet. Probably another data release story. Last patient visit completed in phase 3 trial for a peanut patch. Well, that means their data is going to be evaluated and potential approval. I don't know anything about it, but pretty nice move off of the 50. Double momentum coming out of a squeeze. Great relative strength in OBV. GPCR is structure. You know, I looked at this over the weekend. It wouldn't have mattered because it gapped up so much, but My God, weight loss is powerful. MTVA, not interested. And then OOMA. It's interesting because it took out the 200, but it's still in a downtrend. What is this? Another communication services. And then if I was to look at the single A trades, these are pullbacks, uptrends with squeeze, momentum, and breakout. So Compass earnings were out, which is a good thing. Let's see if we can see the earnings of the year. We even have them yet. We don't get Compass Pathways. Don't know why. I don't even know what Compass Pathways does, to be honest. Pathways and Beauty Health. Okay. Small cap medical companies. Is it a payer? Accelerating patient access to evidence-based innovation in mental health announced today that management will participate in the following conferences. Well, I'm into value-based care. That's what I do for a living. I hadn't heard of them because I don't do mental health. I like the break off the 50. I've got coming out of a squeeze with momentum, good relative strength, not extended. So Compass Pathways looks interesting. And I believe, as I mentioned, earnings are out. Well, we don't know that because we don't got the fundamentals. There's DBVT again, which we liked. DYN, kind of an orderly uptrend. Let's take a look when earnings come out. Not to February. What do they do? Muscle Disease Company, advancing therapeutics for genetically driven muscle diseases. Well, we talked about SRRK, but here's one. Nice uptrend, a little bit of a pullback. You had a gap, volume, breakout, momentum out of a squeeze, which is a big deal with good relative strength in OBV. Here's structure. We already know this one had a big run on data. HE, Hawaiian Airlines, Hawaiian Electric. Don't like the reversal there. IMAX, the big movie theaters. I guess people still go there. Let's take a look at their fundamentals. Earnings are due February 18th. They're expecting 42 cents versus 21. So that's about 50% growth. That's pretty good. It's had surprises the last several. It's got revenue growth, multiple 22, so it's growing faster than the multiple. That one looks interesting. Nice uptrend, pull back to the 50, breaking out here. Chimera is the one that has the Dupixent-like drug. MTVA, I was less interested in, don't know much about it. And then WVE is the Wave Life Sciences. I'm boring. I like playing LABU, and sometimes this thing will run into the JP Morgan meeting, which is the second week of January. So biotech still strong. Rate cut overhead. Chasing these companies where the data came out after a pop is always risky. I'm going to stick with my LABU. I am going to give this market a little bit of breathing room, and we'll see what we do at the open. Take care, everybody, and hope to see you on Saturday. Look for the link below.